About the news flow for today's show. Are you speaking about Alphabet, Google, or what are you thinking, like retail sales, et cetera?
No, Alphabet Google is going to be very interesting, and Nvidia. I think if you do see this little rotation or this battle between the TPUs and the GPU space, how does that actually impact the broader market? Nvidia obviously has a bigger market cap. Google continues to move to the upside here. You also are seeing Broadcom move to the upside here. But how does that rotation really look like, and how much of an impact could it have on the market? I think if you are seeing dollars still staying within the market, I think you're not going to see that much of an impact. But you start seeing some individuals kind of going on the sidelines from Nvidia, maybe deploying a little bit of capital within Alphabet, that could create the market to kind of pull back here a tad bit. So let's see how we actually kind of set this one up. But the communication services sector, now you got to look at it in a little bit of a different lens, because now you, once again, you have Google, Alphabet is in the communication services sector, and Meta is making a nice little stealth rally as well. That could also have an impact on the S&P 500. But once again, we're a little bit tech heavy on the semi space, and there's a lot more exposure when it comes to the GPU trade from the Nvidias, AMDs of the world, as well as the memory players that could also pull back a little bit, and once again make it a little bit heavier for the S&P to kind of advance here.
But it doesn't have to be a zero-sum game, right, in terms of Alphabet, Google versus Nvidia. Right?
I mean, the market's going to play it that way. I mean, you're going to hear commentary all day that there's going to be one player over the other, and I agree with you. The diversification of data centers and making sure that you have a diversified portfolio when you're building these things out makes a lot of sense. And GPUs, in some respects, is really going to be critical within the data center, because GPUs are a lot more versatile when it comes to the amount of things that they can do. The TPUs themselves, or the tensor processing units, they pretty much strip out all of that graphical capabilities, and they're just focusing really on math and really doing that well, and they're also able to do that at a lower cost when it comes to energy deployment and efficiency here. So there's a double-edged sword with both, if you will. And I don't think it's a zero-sum game at all. But once again, the market might perceive it to be as one, and if that is going to be the case, then that gyration or that rotation and fund flows could make it a little bit interesting when it comes to the market. That's how I look at it, the same way that you do, Diane. But everything's kind of black and white these days, and you're looking at these type of things in the market.
I know, because the thing is, I mean, and now it feels like you're on a boat and suddenly everyone's moving from one side of the boat to the other side of the boat. And before, within the mega cap tech names, it could be, a string of winners here, and you're looking for a string of winners. MoffettNathanson lifting its price target on Alphabet Google to 315 this morning from 305. I feel like they may need to lift it higher from there based on the momentum that we've been seeing in Alphabet Google. Any final thought on Nvidia before we dive into the latest with Alibaba's quarterly results?
Look, I mean, if Nvidia continues to pull back a little bit, look at that 170 level as an area of support. That's where we have seen buyers kind of stepping in before. Is that going to be the case this time around? If you're still looking at the price of sales and other metrics fundamentally when it comes to Nvidia, their growth is still, rising to the upside. It's still accelerating. It's still cheap on a relative basis. But if you're looking at these current growth rates, I think the concern is that their growth rates are going to stall out here a tad bit, because you are seeing maybe some market share being given up. We haven't had any of this news actually kind of confirmed yet as well, so we have to be mindful of that. But I would say that 170 level. And then also, too, look at Broadcom. Broadcom is actually in a consolidation and potentially going to break out. This one is actually probably underperforming compared to Google as well. And Broadcom is really at the heart of the overall TPU space in general, so there might be a little bit more perceived value that is there as well. And last but not least, when it comes to this kind of scenario, what does crypto do as well, right? It's different from the AI space, but you are seeing cryptocurrencies also selling off. That could be a little bit of a headwind for the broader market.
The news that Meta Platforms is in negotiations to pay billions of dollars for Google's AI processors caused Nvidia's stock to plummet, indicating that the internet search giant is making progress in its attempts to compete with the strongest AI accelerator in the market. According to the information, which quoted an unnamed source involved with the conversations, Meta is in talks to employ Google processors, also known as tensor processing units, or TPUs, in data centers in 2027. According to the news source, Meta might also rent chips from Google's cloud division in the upcoming year. For large tech companies and startups like Meta and OpenAI that require processing capacity to create and operate artificial intelligence platforms, an agreement would help establish TPUs as an alternative to Nvidia's chips, the industry standard. In post-hours trading, Nvidia's stock fell as high as 2.7%. Alphabet, the company that owns Google, increased 2.7%, contributing to a recent spike in excitement over the most recent iteration of its Gemini AI engine. In order to highlight the possibility of long-term challengers to Nvidia's dominant market position, Google earlier signed an agreement to supply Anthropic PBC with up to 1 million of its chips. Seaport analyst Jay Goldberg described the Anthropic acquisition as a really powerful validation for TPUs after it was disclosed. According to him, many people were already considering it, and many more are most likely considering it right now. Google did not immediately reply to inquiries, while Meta representatives declined to comment. What Bloomberg Intelligence says, Meta's probable usage of Google's TPUs, which Anthropic already uses, indicates that in the near future, third-party providers of huge language models are likely to use Google as a backup source of accelerator chips for inferencing. We estimate that, with a capital expenditure of at least $100 billion for 2026, Meta will invest between $40 and $50 billion on inferencing chip capacity the following year. Due to demand from enterprise clients who wish to use Google Cloud's TPUs and Gemini LLMs, consumption and backlog growth for Google Cloud may accelerate in comparison to other hyperscalers and neo-cloud peers. Nvidia's earnings have continued to rise. Its chips are still in high demand, but its skyrocketing accounts receivable is a warning sign that investors should keep an eye on. Because of the unquenchable demand for its graphics processing units, GPUs, Nvidia maintained its impressive revenue growth trend in the third quarter. Investors should be mindful of one warning sign in its study, though, going forward. However, the results caused the stock to soar, and it is currently up over 40% for the year. To determine if investors should purchase Nvidia stock or turn a profit, let's examine the company's performance and future prospects. Nvidia's largest growth driver for the quarter was data center sales, which increased 66% of $51.2 billion, thanks to the company's Blackwell processors. With revenue of 162% to $8.2 billion, its networking portfolio also performed exceptionally well within its data center category. The company attributed the rise to its InfiniBand and Spectrum-X Ethernet technologies, as well as its NVDA Link connection solution. According to its research, Oracle, Microsoft, and Meta platforms are all utilizing its Spectrum-X Ethernet switches to construct massive AI factories. NVIDIA management stated during its call that demand is still higher than anticipated and that it did not see any indications of an artificial intelligence AI bubble. The management reported that all of its GPU generations were fully utilized and that all of its cloud GPUs were sold out. NVIDIA also stated that its older A100 GPUs, which were deployed 6 years ago, were still operating at 100% utilization, in large part because of its CUDA software platform, directly refuting renowned investor Michael Burry's pessimistic assessment of the AI infrastructure market. Burry has maintained that GPUs only have a 2 to 3 year usable life. As a result of their GPU's depreciation during the previous 6 years, cloud computing companies were inflating their earnings. The business also reported that, even though it had obtained a license to sell its H20 chips in China, sales of the chips were just around $50 million for the quarter. The results from NVIDIA's other divisions were likewise strong. Sales in the professional visualization market increased by 56% to $730 million, while gaming income increased by 30% to $4.3 billion. At the same time, its automobile division's earnings increased 32% to $592 million. Self-driving technologies and alliances like the one it formed with Uber were the main drivers of the impressive auto performance. With $23.8 billion in operating cash flow and $22.1 billion in free cash flow for the quarter, the corporation is still a cash flow machine. After repurchasing $12.5 billion in stock during the quarter, it concluded the quarter with $60.6 billion in cash and marketable securities and $8.5 billion in debt. Looking ahead, NVIDIA predicted that its Q3 revenue will reach over $65 billion, a 65% increase. No data center income from China is assumed in the forecast. NVIDIA's report raised a red signal because the company's accounts receivable continue to soar, despite the fact that the guidance and report were excellent. This measure exceeded its sales increase throughout the quarter, rising 89% year over year to $33.4 billion. The amount of money owing to the business for shipped goods is known as accounts receivable. Significant increases in this statistic over time may indicate channel stuffing or issues with collection. It is considerably more noteworthy now that Nvidia has begun investing in its clients, such as OpenAI and Anthropic, since the chipmaker is effectively giving these businesses the money they require to purchase its processors. Circular funding of this kind is probably not long-term viable. Still a good time to buy Nvidia stock? I wouldn't sell the stock just yet, but I do believe that investors should be mindful of the possible dangers posed by Nvidia's cyclical financing and growing accounts receivable problem. The business is still making a ton of money and expanding at an amazing rate. With the help of its CUDA software platform and NVLink interconnect solution, the business has established a broad moat that enables its chips to function as a single, potent unit in response to the genuine and unquenchable demand for its processors. It will probably depend on OpenAI whether or not this warning sign turns into an issue in the future. Although the AI model company is now losing money and depleting its capital, it intends to make significant investments in expanding its AI infrastructure. It may be too crucial to fail, though, because it has ties to almost all of the big names in the AI industry. But this is not something that will happen for years to come. I anticipate that Nvidia will continue to generate strong growth and remain one of the largest AI beneficiaries in the meantime. I therefore consider the stock to be a buy, but I would keep an eye on this risk. Over the past few weeks, AI stocks have been going through a difficult time. Wall Street feels that the entire industry is currently in a bubble, thus some have cratered and others are plateauing. The billionaire Ray Dalio, the founder of Bridgewater Associates, agrees. But there's a difference. Dalio believes we're at 80% of the 1929 and 2000 excitement, but he acknowledges that the market is in bubble territory. Additionally, he asserts that the bubble needs to be pricked, implying that in the absence of a negative stimulus to slow it down, the market as a whole might continue to rise. The rally might not be stopped by fear alone. As a result, he advised investors against selling just because of a bubble. He argues that we haven't yet experienced the pricking of the bubble. Ray Dalio's own portfolio might have the solution to this question. According to Bridgewater Associates 13F, he significantly sold off a large number of AI semiconductor stocks, even if he did stock up on other equities and ETFs. Dalio reduced his ownership of Nvidia shares from 4.72 million to just 2.51 million after selling 65.38% of them. Additionally, he cut his Alphabet share by 52.61% and his Broadcom holdings by 26.68%. Additionally, his Meta Platforms holdings saw a 48.34% decline, practically halving them. Simultaneously, he raised his holding in the iShares Core S&P 500 ETF by 75.31% to $2.71 billion. His largest holding at the moment is this. He more than doubled his ownership of Lam Research and raised his Salesforce position by 22.41%. Dalio's investment in Adobe increased by more than 73%. This indicates that he is moving away from hyperscalers and toward more specialized AI stocks. Bridgewater Associates continues to be a net stock purchase. Dalio probably doesn't want investors to sell in a frenzy because of a bubble. Perhaps it would be wiser to do as he is doing and reorganize certain holdings. There are still equities with significant upside potential that are trading at a discount despite the current positive climate. Additionally, equities like Nvidia can continue to generate gains until the bubble is pricked, as Dalio puts it, if the overall market continues to advance in earnest. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
All right, I asked an earlier guest about this. What do you make of this report that Meta is considering buying chips from Alphabet? It could potentially be, kind of a rising competitor to Nvidia, and a lot of people thought that their chips were irreplaceable. Does this change your view of the AI trade and maybe even portfolio management?
Well, look, I think a lot of discussion has been around the AI CapEx spending cycle, and I think while it tended to be more asset light, you saw a big, move up in valuations, up until recently. I think the fact that some of this is being more debt finance than equity finance, I think it's going to put some pressure on the space. I think there's some areas that are a little frothier than others. I mean, if Meta's deciding to go with Google, great. And obviously, Google will benefit. I think there's going to be some big winners and some big losers in this whole trade. So,
Okay.
obviously, we participate to some extent, but I think there's certainly some frothiness that needs to unwind a little bit.
You didn't answer the one question just about your view of these different stocks. I mean, do you see more people piling into Alphabet? One thing to point out, I'm going to give credit to Jim Cramer, who put this out on X earlier, is that the CEO of Broadcom is actually on the board of Meta. So while there's not that circular spending, there's certainly a connection there.
Yeah, definitely. I mean, when you have some of that connection, I think sometimes it can lead to some disruption in the industry. And so, look, I think for sure Google will certainly be a beneficiary in the trade if you're looking for an answer specifically, as it relates to those companies.
All right. Coming up today, we get some data. A lot of people were starving for data. Are you one of those people? How much weight are you putting on PPI and retail sales?
So I think PPI is certainly important as when it comes down to the Fed making a decision around, lowering rates, whether it's, in December or early next year. The retail sales stuff, I do, you mentioned with your last guest, I do think that is somewhat backward looking. I think, heading into the holiday season, I think we're set up relatively well. So, I'm less focused on the retail data, but certainly from PPI perspective, I think that will be impactful.